Now, in this particular installment of how to read the RSI, we are going to take a look at a method that is very simple, and this method actually uses the stock itself to tell you how to trade the stock or the instrument. Now, this happens in any time frame, be it on the monthly chart, on the weekly charts, daily charts, hourly charts, 30-minute charts. It's going to work on your RSI setting if you can observe what is going on. It's going to tell you what to do when a stock is moving above or below a trend line that you've observed is legitimate as far as the stock's behavior is concerned. So in this particular example, the blue line is the RSI and the gray line is a trend line that we've observed. So we took this low here and this double bottom low here formed a straight line. And so what you do is that the next time the stock comes and breaks this trend line, the gray line, which you've established now because you cannot connect this point and these 2 points, so you draw a straight line. So once we broke down below that trend line, which is this level here, that was a sell signal. And so you don't buy the stock until the next time the stock comes and actually breaks out of this, above this gray line. Now you can see there were several attempts here to move above the gray line that failed. Now why is this important, using the gray line? It's important because this is the stock's own behavior telling you to go long or to go short a stock. So it works because it's not just you trying to figure out what the stock is trying to do. The stock is telling you this is what we are responding to at the current market situation. So the next time the stock moves above this gray line, which is there, it is a buy. And the next time what you do is that you hold this stock. So once you get this move back above the gray line there, you hold the stock until such a time in the future it moves back below this gray line. So you buy it here, hold the stock until it breaks down here. Now you'd say that makes no sense. Yes, it makes sense because what happens is that after moving above this level here, back above the gray line here, the stock's price will continue moving higher until a certain time when it breaks down below this line here. And when it does break down below that line, what is interesting is that it's going to happen at a higher price point. So it's going to break the trend line there, but it's going to happen at a higher price point. So you're going to get your entry at a lower price and your exit here at a higher price. So entry here, exit here on the RSI, but the price point is going to be higher, so you're going to have a gain on that trade. So what happens here is that if the stock, for example, if the stock bounces on the line, bounces here and moves higher, then this becomes a buy signal. So you buy here. Why? Because the stock has found a double bottom support, so you buy it here or add to your position. On the other hand, if the stock breaks down, you either want to get out of your long position or you want to initiate a short position, short term. So a break of this gray line support, any break there is time to sell or to go short. So let's take a look at a current example here so we can see what we are talking about. Now this is a 60-minute chart for the airline index. Very simple. You'll notice that this blue line happens to be support. So this line here, take this low here and this double bottom here. So they establish a straight line. You see that this was a buy signal here because this line held, this blue line, it held here, which happens to be this low here. So the stock moved higher, and it's only until it came back and broke this trend line. So the red dot there is a break, which is a break of this line here. So this was a sell point. You get out of the stock. The next time to get back into the airline index is, let me take that off, is when the airline index moves above the blue line, back above after moving below it. Once it moves back above this blue line, which is this level here, okay, and also interestingly enough happens to be an interesting point because it also connects to the highs here. So once it moves above 2 points, it moves back above the blue line, which is this this line here, and it also moves back above the RSI highs. So you have two entry point buy signals. So you buy it when it reclaims back above the blue line and above the highs there on the RSI. So that happens to be this area here, and you enter the stock, and the next time you want to get out of the stock is when it moves back below the RSI. And you see it hasn't happened yet. So like I said, whenever this price is going to be broken, or the RSI is going to break this trend line, it's going to happen at a higher price point. So you enter here, sell whenever the RSI gives you a sell signal, which is going to be at a higher price point. So entry at 61 and a sell whenever it moves. It could be at current levels or higher. So this is a very simple way to use the stock's own action to tell you when to go long and when to go short a stock. So let's say somebody wants to short this instrument. The best time to short this instrument is down the road whenever we break below this line here, which has been established by these 3 points, the low here and these 2 points here. So once this line is breached to the downside here down the road, then you can sell. For now, you own it after this entry point was established until it breaks down the road. It's a very simple method, very powerful, especially if you can find this on monthly charts and weekly charts and even daily charts. You see that they give you nice entry points, and you can hold until the stock itself breaks the RSI trend or moves back above an established RSI trend. Eric Moade, good luck, peace, and blessings. Woo!